Hello and welcome. This is Rasha with me, Sumit Chaturvedi. Let's begin with the biggest story, which is markets, tariffs, and what all is happening there. As tariff wars deepen, all major global markets they've plunged in trade. Asian markets today witnessed their worst drop in decades, while Hong Kong stocks led to sell-off, with Hang Seng falling 13.2%. Tokyo's Nikkei hit an 18-month low. South Korea's Kospi tumbled to end day 5.7% lower. In addition, European markets, they are reeling under pressure, and back home Indian markets also took a beating as Nifty 50 ended day 3.2% lower. Can we expect rout to worsen going forward, and how should investors brace themselves going forward? We will discuss all that and much more with Mr. Geoff Dennis, independent emerging markets commentator. Well, thank you for joining us, Mr. Dennis. First of all, let's begin by talking about whatever happened today. Was on expected lines for you, or you think it was more than expected?
I think the scale of the losses was more than I would have expected, but I think the direction was much as anticipated. In other words, what happened over the weekend is nothing happened over the weekend. President Trump played golf. We got nothing on any potential retreat on any of these tariffs. Excuse me, and we didn't get also any sense that any deals were about to be done in terms of individual countries and negotiating lower tariffs or lower than the threatened tariffs, the reciprocal tariffs that will come into effect apparently in 2 days' time. So I think without any new deals, it was likely that markets would fall again. The scale of this decline, though, has been very surprising to me and perhaps a little overdone in the short term.
Meanwhile, Mr. Dennis, I would like to tell the viewers what has happened as US markets opened on Monday morning. S&P 500 down 3.2% at open. Nasdaq 100 falling 3.6%. S&P 500 said to enter bear market after falling 20% from record highs. Meanwhile, Trump says countries from all over the world are talking to us. He spoke to Japanese Prime Minister. So the question now, how deep it is going to become from here on? What happens as far as the markets are concerned?
Well, it very much will depend, I think, above all, on what Trump does. Does he strike some deals with individual countries? I think that would help sentiment. Does he actually impose these reciprocal tariffs on Wednesday? Are they the same as he threatens, or are they reduced or perhaps narrower than anticipated? All of those things, I think, could possibly support the market. But the sell-off you're getting in the US, which, as you've said now, is over 20% on the S&P composite, so technically a bear market, reflects the fact that people worry that the tariffs and the global trade war that has been set off by, in particular, the Chinese following up the US tariffs of 34% with their own of 35%, which has really shown it's a global trade war here. The worry is it's going to force the US into recession. And if the US goes into recession, a typical sell-off in the market could be as much as 25-30%. So I think that's what the markets are talking about here. Fear of recession, nobody blinking in the White House, if you like, on tariffs. And we have to wait to see what will turn this sentiment around. As I say, I think some easing of the reciprocal tariffs would help. And I think it also brings the Federal Reserve into play before too long as well.
Well, a black Monday for all the global markets, including America. So the biggest question that arises, who is it going to benefit, Mr. Dennis? Because it's the market, stock market investors are losing. In the US, inflation is going to hit poor and middle class. So who is this ultimately going to benefit?
Well, that's a very good question. I don't think anybody's going to benefit from it in the short term. Now, the only argument that the White House is making, and it's a reasonable one, if in fact I don't believe it, but the argument being that these tariffs long term will bring some manufacturing industry back to the US. But this is such a long-term prospect and such a unlikely prospect for me that investors are saying, I'm going to sell now and wait to see what happens down the road in terms of potentially relocating some of these factories, some of these activities to the US. And so long term, it could well benefit American workers. But in the short term, everybody gets hurt by this. So those at the more wealthy end of the spectrum get hurt because of the loss of their sharp decline in their wealth held in the stock market, unless you've been very smart and be buying bonds and selling stocks prior to this. And at the lower income level, where the predominant number of Trump supporters is based, they will feel this through potentially companies laying off people because of the uncertainty over where the company goes from here. And secondly, above all, because the price of foreign goods is going to go up, and it's going to go up quickly, and it's going to go up quickly in the sense of it's going to happen rather rapidly, and that is going to squeeze personal income in real terms of the above all of the poorest paid. So it's not quite clear who benefits. Obviously, as I say, the long-term hope is that US manufacturing will rebuild, but I think that is a forlorn hope, my own view, and that's going to be way down the road, several years down the road. So a lot of pain to go through before we get there.
Right. Mhm. And as we say, every dark cloud has a silver lining. So, what silver lining do you see in this dark cloud?
Well, the obvious two would be number one, that Trump retreats from some of these, a good chunk of these reciprocal tariffs, which are due to come into effect on Wednesday, which would take the heat out of the global trade war, and in particular would perhaps put pressure on China to reduce their tariffs on US imports, etc. So I think some sense that we're not going to get such a swinging set of widespread and high tariffs across the world would, I think, be very helpful. Obviously, linked to that would be, trade deals with certain countries to reduce that reduce that tariff pressure. I think the other thing that would help in the very short term is if we move towards a more friendly Fed policy. Now, the Fed is sitting on its hands right now because it can wait and see. The economy doesn't look too bad at the moment, but if it's going to plunge towards recession, which is certainly my view now, even if inflation goes up in the short term, perhaps I should say more prices will go up, and it will be a temporary impact on inflation, would be my bet, from these tariffs. And maybe we're looking at 3 or 4 rate cuts this year, not 2, which has been my forecast. So an early rate cut from the Fed and some sense that these reciprocal tariffs are not going to come in scale like they have been threatened. These would be the things I think that would provide some relief for the market.
And if we talk about recession fears, how serious are they? Beginning with US, definitely it is going to impact the whole world. But in US, how serious are the recession fears?
Um, I think it's very serious in the US, and I think it's serious because although obviously the US is not in the forefront of the tariff pressure as yet anyway, you haven't seen a lot of retaliation from countries. A lot of countries would like to try and negotiate rather than retaliate, except of course China. I think that puts the US in theory in somewhat better shape than certain other countries that are facing big tariff increases for their goods going to the US, thinking about a country like Vietnam, for example, or Taiwan, huge tariffs. But the problem for this with the US is it's going to lead to enormous corporate and consumer uncertainty, which is going to, I think, put pressure on demand and potentially push the US into recession. Meanwhile, as I say, you'll get higher prices for a period of time. So I think that's the way it plays out. I mean, there is one part of the world, if I could say this, that I think is more protected from this than other parts of the world are, and that's Latin America, ex-Mexico, where the tariffs are quite high. But the rest of Latin America has only got a 10% tariff on their goods, the standard tariff, if you like, across the board on their goods going to the US. So I would expect some investor money to go towards Latin America in this environment, not least because also Latin America is a cheap region compared to, say, Asia. But generally, that's how I would try to answer your question.
And Mr. Dennis, one more thing. Very soon we'll see the January to March quarter results coming in of the companies. And it is very difficult at this moment to give any projections or make any projections for the rest part of the year. How do you think this will impact the corporate profitability now for many more months to come?
Well, of course, the market in the US has expensive, above long-term averages in terms of any sort of sensible valuation ratios, particularly in terms of PE, for example. And some of that froth has come out now with the market, selling off basically 20%. However, I think there will be pressure on earnings expectations coming from these company reports. Now, I think it's fair to say that the impact of the tariffs directly on company results in the first quarter itself will probably be quite limited. There will be some impact, top line impact potentially, from reduced sales as consumers pull back for perhaps. But the big impact, I think, on the market from the earnings front and from these reports that are starting to come through this week and beyond is going to come in terms of what these companies are saying about the quarters to come and the rest of the year. And that's going to be very complicated. It's very, very cloudy because we still don't really know the full extent of what these tariffs will be. And so expect negative projections, or at least more negative than they've been in the past in terms of earnings projections, but also expect a lot of uncertainty with CEOs being unwilling perhaps to really speculate much on where earnings will go. But as for the impact so far on Q1, I don't think it'll be that great.
All right, thank you very much, Mr. Dennis, for joining us this evening, putting things into perspective, and once again telling what should be expecting, what should we not be expecting. Thank you very much once
Thank you very
again.
much.
Moving